Sunil Dukkal, CEO at Dabur India. He joins in on the show. Sunil, hi, morning. Your board is okay to increase the FI limit to 30%. What is the rationale behind this move, and have you been approached by the FI fraternity to up the stake?
There's been a lot of FI interest in our company's stock in the past and more so recently. And I think the cap was proving to be a little limiting in terms of the amount they could invest. So we thought of removing the cap, because if there is interest, then why not service the interest? And there's not been any specific approach by any particular FI, but there was a general feedback given to us from FIs that the cap is a limiting thing. In any case, our free float is quite low. In addition to that, if you impose a cap, then the FI investments are actually pretty small.
Sunil, FMCG companies are betting on economy packs to drive volumes. Reports indicate that even your company has increased the production capacity for low unit packs by about 10 to 15%. Could you throw some more light on this trend?
Yeah, I think it's not so much driven by a preference for lower packs. People downtrading to lower packs. It's just that the rural markets are showing a lot of growth, and the rural markets have a strong preference for low unit price packs. So products which were earlier not being sold in the rural areas are now being sold there. But again, the rural consumer prefers to buy them in small pack sizes. So therefore, to service the demand, we have taken up production capacity by 15-20% of our low unit packs. Low unit packs are very intensive in terms of capacity utilization. They occupy a lot of plant capacity. So to service that demand, we do have to increase the production capacities in our plants.
So are you also looking at tweaking packet sizes?
No, I think the preference, like I said, is for low unit price packs, but the other packs do sell as per regular course, mostly in the urban areas. So I think in terms of mix, there's a little bit trend towards the low unit price packs, but otherwise the big packs also continue to sell.
Sunil, I want to know about some specific investments which you are making in new products and any launches which are lined up in coming quarters.
Yes, we'll definitely be launching new products in the coming quarters. We have so far launched a new range of juices which are yogurt based, another range which are milk based, so that's been two big initiatives in the beverage segment. We've launched a new hair oil and a new shampoo in the southern markets, and we'll extend it to the rest of the country. We are going to be launching another new hair oil in the next few weeks, and then there'll be other product launches in the fourth quarter in particular. So the pace of introductions of new products will continue, and there'll be no slackening of that. But perhaps we will not get too much into very high priced products, because discretionary income is still under some squeeze. Until that becomes more visible, discretionary spending becomes more visible, we would be a little bit conservative in launching high priced products. Having said that, we've also launched a variant of Chyawanprash called Ratanprash, which is at almost twice the price of a regular Chyawanprash. So we believe that there is an affluent section of society which can afford new products, but we are going a little bit slow on those.
So are you seeing any change in trend in consumer spending? Do you see revival in demand? Because inflation is still at elevated levels.
Well, as we speak, demand is quite muted, but I do expect a strong revival of demand to happen in the fourth quarter, particularly from the rural areas. That's when the money from the summer crop will flow in and will expand demand. There's also talk of heightening the NREGA payouts, etc., etc. So all the indicators are in favor of high demand coming from the rural markets in particular, and hopefully from the urban markets too. But I do see rural being once again at the forefront of our growth from the next quarter onwards.
On the pricing front, Sunil, are you looking at any price revisions?
Well, we've already done a fair amount of price revisions, and to mitigate the very high inflation which we are facing, particularly in the last few months, we would be raising prices this year by around 5% which is did last year, and the minimum required to keep our margins the way they were. So I think inflation, the outlook is not very clear as to whether inflation would cool off or whether it will continue at these currently high levels. But in any case, at least a 5% price increase is inevitable.
And what's the update on investment in your domestic and international business?
Well, the investment continues, and we are a capital light business, so we invest around 150 to 200 crores in terms of capex, and that is continuing. So we are investing in expanding capacities in domestic market. We also have just completed the Egyptian plant, a large expansion of the Egyptian facilities. We are looking at expansion of Nigeria, a greenfield in South Africa. So there's a lot of that work which is happening, which is basically seeking to raise our production capacities. Not too much in terms of new greenfield plants, but I think in the next year or two we would be having a couple of those also in the anvil. Another big facility which has been commissioned is in Sri Lanka, which is a beverage plant and one of our largest overseas investments to date.
Sunil, do you see a positive rub-off impact of good monsoons and pre-election spending on rural consumption in coming quarters?
Very definitely, yes, and I do see that peaking in the fourth quarter. At this point in time, it's not very visible, but I think it will pick up momentum. As I said, the harvest, the money from the harvest will come into the hands of the farmers in the fourth quarter, and that's also when we'll see economic stimuli to rural sections also at its peak. So we are putting a lot of hope on the fourth quarter to take the business forward.
So what's your outlook then on volume as well as margins going forward?
We have expected a volume growth in the region of 8 to 12%. Margins would be perhaps a little bit higher than last year, but not significantly so. And I think that kind of outlook is something which we would still adhere to. I don't see any change happening to make us deviate from that.